The Empirical Energy Podcast blows open the silent revolution, rewriting the rules of global energy markets. Measured, verified energy is no longer an alternative. It's becoming the gold standard. We dive deep with the producers, traders, consultants, and renegades driving this seismic shift. Step inside the raw mechanics of how verification and blockchain-fueled trading are dismantling the old systems and creating a future where alternative energy doesn't just compete, it takes over. This is the movement of reshaping energy as we know it, bold, unstoppable, and just getting started. Here is your host, Mark Smith.
Hey everybody, welcome to Empirical Energy Podcast. I'm your host, Mark Smith, and I'm here today with Shane Foster from the Gunvor Group. Hey, welcome, Shane.
Mark, thanks very much for having me.
All right, so for those unfamiliar with the Gunvor Group, tell me a little bit about the Gunvor Group, what you guys do, and then your role.
Yeah, Mark, so Gunvor is an energy trader. We've been around for 25 years. We trade all products from crude and its refined products to gas, liquefied natural gas, and power. Last year, roughly 50% of the volumes traded were composed of natural gas in gaseous form and liquid form. Most of our revenue, most of our profit generation comes from buying commodities where they're created, moving them to where they're demanded, but we also have significant assets on the balance sheet as well. So we have power plants, we have oil refineries, we have biodiesel facilities, we have our own shipping company, we have some solar deals. We recently, interestingly enough, bought a retail division in Pakistan. So we bought all of Total's retail stations in Pakistan, and we're looking to expand that business. And we've added a couple of upstream natural gas businesses as well in the US over the last year. In terms of revenue, I think last year was around 130 billion in revenue, and company's equity is just under 7 billion coming into 2025.
And your specific role there?
Yes. So I lead up the energy transition efforts here in the US. And that can be everything from low carbon gas, as we're going to speak about, renewable natural gas, hydrogen and its derivative products. I will say that both my point of view, and I think I speak for the company and I think our management team, we are starting to focus a little more on low carbon gases, applicable emissions reduction commodities that are available today versus hydrogen and its derivative products that might be 10, 15, 20 years down the road and today are extremely expensive. I think we've come back and said, how are ways that we can reduce our emissions and that we can offer products that reduce emissions in today's world? And empirical natural gas is a perfect fit for what we're looking to do.
So we've been working together for, it's been a while, and behind the scenes, trying to figure out what we're now calling empirical energy, empirical gas, and all that. But I remember the very first conversation. And in that conversation, you said, Mark, we got some deals to where we could buy all the RNG in the world and not fill them. There's just not enough volume. It's a small volume and quite expensive. It's not going to work. We've heard about feedstock blending and ISCC. Have you guys heard of this? Can we figure this out together? So I was really intrigued, like all the RNG in the world, like what kind of deals are we talking about here?
Yeah, I think if you take let's say just the publicly available goals for most of the corporates and said, okay, we're going to fill all of that with RNG or similar types of technologies. And let's include DAC in that. Let's include carbon offsets or carbon removals in that. There simply isn't enough to go around. There just isn't enough to remove all of the carbon that we currently have in front of us. I'll use Microsoft as a good example. I think they've been amazing in terms of the public data that they've provided. Last year, they emitted something like 15 million metric tons of carbon. They are buying right now about 80% of the entire global carbon removal business, and they've maybe hit 30% of their current emissions. And they want to go carbon neutral by 2030 and then actually reduce all of their historical emissions by 2050. So to start chipping away at it, they need to be carbon neutral 2030. That includes, which we'll talk about more, all of the data center growth that they're experiencing. So it's a monumental task for one company. And then when you look at the industry as a whole, it's even more monumental. And to that point, I think I said to you is, how do we create something that's scalable? How do we create something that can be lasting? How do we create something that's quantifiable, that can be put into various companies' carbon ledger or their emissions ledgers? And how do we make it scalable? And potentially, how do we combine several streams of feedstock to create an all-in feedstock, whether it be the end user consumer, the power generator, the data center, the feedstock for other green fuels, what have you. And that was the challenge that we started with, about a year ago, as you said.
So I'm going to show a diagram that you and I have been working on, and let's just walk through this because I think it'll help the audience really understand what we're talking about. Because prior to us meeting with you, we were helping Pure West empirically measure their gas down to the site level MMBTU. And we were actually using something that is required by this particular certification, ISCC, which is called ISO 14067 with mass balance. And it's easy to say, but very difficult to do, right? It requires a lot of interesting things like mass balance and figuring all this stuff out. So we had this part, and then you'd been developing all kinds of other relationships with RNG and things like that. I remember our first calls with the ISCC consultants and said, okay, does ISCC allow for feedstock blending? Because we have so much natural gas. And what we're saying is some of our clients produce natural gas at a measured level that is way low, way below what the EPA required at 0.2% methane intensity. And we can measure it with international standards. So you have this huge abundant resource, but the problem is its default CI score is really high, like 79. So if you have down here, the buyer down here at this side saying, hey, Shane, I need a 30 CI product. Can you get it for me? Like some of these RNG, and I've got these things on here. So these abbreviate, like in the case, empirical RNG and empirical natural gas. So some of this RNG is like minus 100. So, and to explain that, how can you get a minus score in the CI?
Yes. Okay. Definitely. And I will hit the question. I want to say quickly, and you'll see this slide, that there are a couple of names on here. So Kimmeridge is a very good partner of ours, and they're developing significant RNG resources. Pure West, obviously, is the first producer that we've purchased the ENG from, and that's a concluded deal. Carbon Direct, Eco Engineers, some of our carbon accountants and engineers. And I want to just say, finally, we have listed here Scope 1 emissions. We can actually reduce Scope 1, Scope 2, and Scope 3, depending on the types of blends that we're putting together. So just wanted to make that point that there's a lot of flexibility here. The ability to blend the ENG and the RNG, it creates so much flexibility. I'll say that ENG can stand alone as well, right? So it doesn't require the RNG to reduce those emissions. But in terms of your question directly, and the RNG, the beauty of it is that you're capturing essentially abated emissions. So you're capturing emissions that would have otherwise gone into the atmosphere. So whether you have a wastewater treatment facility, whether you have manure from various animals, if that manure were to, let's say, sit there in a pit and release its emissions into the air, you'd have significant carbon, you'd have significant NOx emissions. By capturing that, by turning it into a usable product that is RNG, you are foregoing those emissions and actually pulling those out of the air, which is giving you the negative score.
Excellent. There's different end products. So some may say, hey, a 30 CI industrial feedstock to produce, let's say, bioplastics or something, and they can make their environmental claim as long as we follow all of the ISCC certification rules, of which Clean Connect dives into the details and figures out all that data tying into the meters and all that stuff. The other thing, ISCC Plus, explain, okay, so what's book and claim versus physical delivery?
Yes. Okay. Under the ISCC protocol, I'm going to toot your horn for a second here, Mark, which is to say, I am not aware of any other natural gas product, with the exception of RNG, that can get an ISCC certification. For example, there have been other forms of natural gas that have been given various stamps previously. They don't follow a protocol, number one. They don't follow the modeling and the protocol of the ISO 14067. They also don't have a quantified emissions reduction down to the very well pad of the gas that can then flow into the ISCC model and be blended with RNG. Something that you guys have created, something this empirical gas is really a step above any other that we've seen and really important for this. But in terms of the book and claim, what happens is you create a physical product of natural gas, and then you create let's call it an EAC, or an environmental attribute of that gas, which is essentially your emissions reductions. Those two things can be traded together by anyone within that grid or outside of that grid. So you can inject the savings theoretically into the Midwest of the US, and you can pull those savings out in the Gulf Coast, as an example. It's the way that the European system works. It's the way that the ISCC recognizes, so that I view it as, I think of the world or the US is like one of those globes that you shake in your hand and everything comes together. If you're removing some of those particles or some of those carbon savings, it's fungible within the system. And so that's the beauty of this, is that the customer does not need to be physically located where the ENG is created, right? So the customer can purchase these attributes, capture the emission savings, and they can do it essentially in a virtual way on your Proof Zero platform.
And then, of course, in contrast, physical delivery, which is not, you could do both, right? You can get the EAC and They get the actual physical product.
That's right. That's right. So we can deliver the physical gas as well. We can, over multiple pipes or over multiple systems, we can deliver that gas. It's just not a requirement in terms of your carbon account.
If a particular AI data center really wants to differentiate themselves and says, hey, I would like the actual feedstock coming in to generate electrical, maybe even on site or some other way, to be net zero, that's abbreviated that. So we take the eRNG, the ENG, natural gas, we blend it. There's a little picture of a blender here to come up with an empirical net zero gas. So a CI score of 0.
Yes. I'll throw out there that just the empirical natural gas alone, you're saving 20 or 25% of your emissions. Then it becomes a question of, okay, where do I want to go from 75% emissions compared to my base down to 50%, 25%, or 0%, like you said. And that gets into how much RNG, which is that negative CI score, do I want to combine with the ENG and blend to create a feedstock that is 0 CI. Really interesting. Again, given that it can be a virtual delivery, it theoretically can be 24-hour delivery of carbon-free gas that can equate to carbon-free power, similar to REC in the solar or wind space. We just don't have to deal with the 24-hour matching, et cetera, because it can be delivered either physically or virtually on a completely ratable basis.
So a benefit to the producer is, number one, we figured out how to automate a lot of this, right? We put our software and different things in there, and we can crank out these EACs, environmental attribute certificates, which then can be traded. And of course, they do a standard NASB agreement with Gunvor or maybe I'll call it a NASB Plus, because it has the standard physical delivery stuff, but it has this extra bit about allowing you to create and trade their EACs.
Yes. So we are trying to, with this process, I think what you have created is new, but we're trying to take a new concept, a futuristic concept, and put it into a format that the industry can work with. And the NASB is a standard contract that you buy natural gas, you sell natural gas using this contract. North American Energy Standards Board is what NASB stands for. It is the contract that the industry uses. There are ways to check just physical natural gas, and there are ways to check the attributes associated with the natural gas. Basically take what you've created, which it will be a new concept the industry, put it in a fungible product that is known to the industry and trade it that way. Yes.
So for some of the people who said EAC, hey, you're creating something out of nothing. Look, if you rolled the dial back 100 years, people would have to have physical access to the ground that you're drilling on. But then someone figured out legally how to split off the mineral rights. And I imagine those first people that you're creating something out of nothing. No, it's a legal construct, but it allows you producers to now have rights to those minerals on a piece of land that you may not even own, but you have the mineral rights to that thing. Same thing, EACs, it's a birth certificate for energy, and it allows you, the trader, to then trade that, combine it with different EACs, and essentially trade a new product, derivative product.
Yeah, I love that concept. It's the birth certificate of the energy. I've been using this kind of analogy and I like it. My background was on the refined product side on oil. And even though gasoline and diesel is a fungible product, each refinery, each location produces a slightly different specification. And those specifications can trade or can have different values. And I think that's what's happening in the gas space, which is there's a diversification happening. And what you are doing with Empirical Energy, what we're doing here is capturing that difference in energy. Openly, not every well pad is going to be theoretically cleaner than what I think of as the kind of the industry standard, but we're finding the best, the cleanest, et cetera, capturing those savings in the birth certificate. If you think of a baby, the weight and the length of the baby, that's what's being captured in the EAC. That can be separate from the gas. Those savings can be separated. Really interesting. I know I talked about Microsoft, but Carbon Direct, which we have here, just put out a report, and it just came out yesterday or the day before, talking about Microsoft in the green cement and the steel industry. So they are actually buying the EACs that cleaner cement and steel producers are using, and they go into detail, which is to say Microsoft doesn't have to actually use the actual steel that's created or the actual cement to be able to hold on to these EACs. So in theory, there's a cement plant, let's pick in the Northeast of the US, generating these EACs because they're creating a green cement. Microsoft is putting in a data center in Arizona, just picking a place. They can use those EACs from their savings, apply it to the steel that they're purchasing in Arizona, and have a much more carbon neutral data center. Same concept here. This is a very interesting way to capture, document, trade, and then let's use the term burn because that's what we're using, but burn, which is to say categorize, audit, and capture those carbon savings within your company ledger.
Exactly. So there's benefits to the producer because we're automating this, we're creating a brand new asset, the EAC, and they're getting a premium for that, okay? Depending on how clean it is and so on and so forth. On the other side, on the buyer side, they're actually able to fulfill some of their desired things at scale. Maybe they've tried small quantities, small batches, so to speak, of RNG in the past, which wasn't empirically measured. But now with this new empirical gas and these feedstock blending, they could do it at scale. Now they're not waiting to build some nuclear power plant. They're not waiting to tap into some intermittent wind and solar deal down the road. Like this is something that could go to scale today.
Exactly. I hear three themes when I go to conferences and I talk to end users or I talk to long run energy planners, which is we need something that allows us to decarbonize, something that is reliable, and something that is affordable. You have, in theory, futuristic technologies that are not affordable at all. Reliability is certainly a question there, but this empirical natural gas hits all three. Right? Yes, there's a slight premium, but that premium, if we're talking about it, is probably in the single-digit % over the cost of natural gas in terms of the increase. I think that's relatively very cheap. Also, when you compare that to, frankly, when you compare that to other carbon removal technologies, it's extremely affordable to the tune of, I would call it 25 to 30% of the cost of what current carbon removal deals are being done. So it's affordable, it's reliable, it's available today. It's a drop-in with other natural gas. Yeah, it works all around. So I think it hits those three concerns.
So I think, so there's benefit for the producers, both of RNG and ENG. There's benefits for the buyers. There's other things too, like just the way we figured out how to trade on the blockchain. So these EACs essentially are NFTs. I won't go into a lot of detail here, but in contrast to what's been done today, where you may have to deliver piles of spreadsheets or registries to do this. And it's a lot of back end work on the part of the trader, but then you're also handing this interesting mishmash of spreadsheets to the buyer who's, what do I do with this? Whereas this is going to be stored. And I think more and more people are going to have crypto or like Bitcoin and stuff on their treasuries. This is something that can be stored right on a blockchain as a treasury, any kind of combination, and all those attributes you can go right back to down to that birth certificate of that individual MMBTU.
That's exactly right. So if the end user, the consumer of the EACs or the gas is audited, which I imagine will be the case, they can actually say, here is every single quantity, every single CI score of that quantity. And here's exactly how I calculate my scope 1 and potentially my scope 1, 2, and potentially 3 emission savings. Yes.
And if, somebody's watching this down the road, we're going to get into a lot of details about how all this stuff works. And it's a lot of work, right? There's a lot of things that we've had to figure out. But if another trader were to come along and say, hey, I've got this buyer, is this something that they could contact Gunvor and you could help them without them having to worry about all the feedstock stuff? They could just fill an order.
100%. Yes. So we want the market to grow. We want this to be, let's say, available for theoretically all natural gas consumers could be an end use consumer of this. So yes, any other trader could contact us. And we've fortunately worked with you, gone through the process and made it very simple now where I would imagine they set up an account, we'll transfer them the EACs and they are able to burn those either on behalf of the end user or then transfer those to the end user who can burn those carbon savings and then account for them. So yeah, it's been a lot of work with you and your team. Certainly we appreciate it. We've now set it up that I think it's a very usable, user-friendly process.
Excellent. And as the name implies, Empirical Energy, this podcast will be the place where we're going to just keep educating the market. Shane, I'm looking forward to future episodes where, as questions come in, we could just do an episode, record it, and then people can watch that, both producers, traders, buyers, and other people that we see in the ecosystem. We're already talking to, in fact, I'm presenting at an insurance show coming up, and they're very interested in the whole empirical energy ecosystem. There's going to be auditors who do this, and we figured out ways to do rinse repeat. So instead of this audit being this huge, gigantic burden, we're simplifying even the audit part of it so they can do rinse repeat and we can grow this certified stuff at scale. Anyway, Any last thoughts about this?
I think that, Mark, I'll just say, I think that when end users inquire about this or when they go through the process, I think it's going to appear very simple and very put together. And frankly, that's usually a function of the amount of work that has gone on behind the scenes. I think you and your team have made this, again, a very user-friendly process. And I'm excited for people to see it. I'm excited for them to see the work that you've put into this. I'm happy to be a part of it and contribute to the process. So with that, I would say that's my end remarks is I'm excited for people to see it and go, wow, it's that easy for me to save on my emissions data. I can scale it up, as you said. The cost of it, I think, is very palatable in today's market. So I think we're sitting in a very good position here.
And I could say the same thing, working with an experienced energy trader to create a new asset class, a new product, a new ecosystem has been fantastic because you're teaching us, we didn't know anything about energy trading, to be honest. We knew nothing. You're teaching us how it's done, but you've been super open to, bringing on all this new technology, the AI, we're using the machine modeling, the automation, the blockchain stuff, saying, hey, let's figure out how to do this with all the new stuff. We'll teach you the old stuff and let's come together and bring both worlds together. So this has been a great, and I feel like we're not quite at the beginning of the journey, but we're out there. And so it's good. So anyway, with that, thanks for being here, Shane. And I know we'll be doing some future episodes together.
Sounds good. Looking forward to it. Mark, thanks for having me.
Yep.
All right. Appreciate it.
The Empirical Energy Podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.